Hey everyone. ASML, as you might already know, is critical to the increase in development of artificial intelligence technology. It supplies the companies that create the semiconductor chips. So, understandably, investors are becoming more interested in ASML stock. So, in this video, I'm going to reveal a little bit about the company that I think what investors should know about ASML as they consider this as an investment in 2024. So, let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things that's happening with ASML is that it's investing in increasing its capacity because it sees an increasing demand for its products. So they see significant costs in 2024 related to the introduction of high NA and to the ramp of their capacity of their 90 EUV and 600 DUV. These are just products that they sell, names of their products and that they have talked about before, which will create pressure on the gross margin. So, as they invest in increasing capacity of these next generation innovative technologies, that's going to hurt their gross profit margin in 2024. So, for that reason, they see a slightly lower gross profit margin in 2024 compared to 2023. Although this should not be alarming for ASML stock investors or those of you that are interested in ASML stock. Let me share with you why that's the case. ASML has done an incredible job demonstrating economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. So now that you understand the importance of economies and scale, you can see here ASML has increased its operating profit margin to 32.81% in the most recent trailing 12-month period, up from around 20% in the same trailing 12-month period in 2015. So the company has done an excellent job in increasing its profitability as revenue has grown, demonstrating that it knows how to effectively invest in capacity increases, invest in next generation technology, and manage its cost while it does these increase in investments. So, those are the reasons why investors should not be alarmed with ASML telling that their gross profit margin will be slightly lower in 2024 compared to 2023. In the longer run, they fully expect their gross profit margin to rise even higher than where it was in 2023, even though 2024 might be a down year. So, the reason they expect their gross profit margin will rise back higher to 55% by 2025 is firstly because higher sales volume of both their EUV and DVUV, which will improve their fixed cost coverage. If you're not aware what that means is the company has a certain amount of fixed cost. Think of your rent, right? If you have a restaurant, you have to pay rent. Whether you have 1 customer or 10 customers, your rent is the same. So when you get 10 customers, you cover those rent expenses better than if you have just 1 customer. It's similar with ASML. It has its manufacturing capacity, it has its fixed cost, and the more sales it generates, the more it covers those fixed costs which it has to pay, whether it has 1 sale or 10 sales. So secondly, they're going to move to a higher margin EUV. So this next generation EUV generates higher profit margin for ASML, and they're going to get more sales from that category, and that's going to increase gross profit margin. Thirdly, they're going to see reduced headwinds from capacity investments. As we already talked about, they're investing in capacity in 2024, and then afterwards, going 2025 and beyond, there's not going to be that investment. So the reduction of that investment is going to boost its gross profit margin. And we already mentioned transitioning to the higher margin EUV system and the installed base business to have a positive impact on 2025 margins due to improved EUV service margins as well as increased upgrade business volume. So not only does ASML sell these innovative technologies, but they also offer service to those technologies. So if you buy one of their systems to help increase your semiconductor chip production, ASML will also sell you the service and maintenance for that. So they'll come in and they'll offer you maintenance and service, and that's at a higher profit margin than selling the actual product. So all of that is going to be in ASML's favor in 2025 and beyond. So those are some big picture items to take note of if you're interested in ASML stock. Also, the stock is trading at a forward price to earnings ratio of 31.69. Now, if you look back at this ratio to, let's say, early 2021, this is, I would say, on average where the stock has traded for going back this time. So what that means is the stock is not cheap and the stock is not expensive. It's average. It's fairly valued, as I like to say. Still, I don't think investors need to wait for a stock like ASML to be cheap in order to buy it. I often say paying a fair price for an excellent business could be an excellent investing decision. And I think that's the case with ASML also. I have the stock rated as a buy because it's trading at a fair price and the business is excellent, as you've seen, demonstrating economies in scale, operating in an industry with a strong tailwind behind it with the increase in effectiveness of artificial technology. So it's artificial intelligence technology, I should say. So paying a fair price for this excellent business, I think, is a reasonable decision for long-term investors to make. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.